investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good. And we have on the line none other than Mr. Rich Anderson to tell us about what's going on in these grain markets. Rich, what in the heck is happening to some of these markets? We go limit up, and now we're trading 15 cents lower in the soybean complex and stuff, and wheat's down. What's happening over there, Rich? And just extreme volatility?
The November beans are still up 10. You know, it's the report yesterday was a big surprise. The average guesses were that there would be an extra 2 million acres of corn, more than what the report showed, and an extra 2 million acres of beans, more than the report showed. And there was 1 million, but that wasn't enough. That's what shocked the market. The carryovers were about as expected, no big deal. But that caused the markets to go limit up in the corn, limit up in the beans. Well, it's really the new crop beans that are the story now. You look at the difference in the price between, the old crop and the new crop, and that's what tells you that's what we're going to need to focus on for the year. The spreads are going to tell you what's going on. The spreads are actually going to tell you everything you're going to need to know. I mean, you look at May corn right now is $5.60. These corn's $4.83. That's 70. It's been between 70 and 80 cents. That shows there's huge demand. And the same thing is true with the soybeans. Your soybeans, the demand is there from China, from every place. The May beans, it's only the wheat that's down. It's the May beans right now are 14.29, let's call it. And the Novembers are 12.67. Well, the new crop stuff has a lot more to go up on the, versus the old crop. And there's this tension. That tension is going to be here for the next 3 months. We're going to need to get these crops planted, and we're going to need to get them off to a good start. The margin of error is so I emailed you the stocks usage carryover, and you'll see that we're trying to balance on the end of a nail. This is going to be a very interesting year, and unless we just have absolutely perfect weather, and we need absolute, that will give us a guaranteed trend line yields. 2 or 3 months from now, we'll be focused, from the middle of May on, we'll be focused on what our average yield is going to be. But for right now, it's going to be focused on getting in the ground. The weather's turned nice. Actually, it's an early spring, but that's kind of offset by the idea that the government's insurance program doesn't allow you to plant before X date, because often if you plant too early, then you come and you get a freeze, and they didn't want to insure it for that. So it's going to make for some volatile markets. The funds stayed long. The funds, as I told you back early March, the funds now are allowed legally to buy more. They increased the size of the positions they could buy. And so it's going to make for a very volatile summer. And you'll have the usage of wheat. The wheat only rallied yesterday because of the corn, and that's why you're seeing the wheat down today. May wheat in Chicago's down 15. Well, the Kansas City wheat on 560, it's the same price as Chicago corn at 560. So, they're going to feed wheat instead of corn, and eventually we'll work this deal out. But we're at pipeline supplies, and we need to grow a crop, or we have a very big problem, Billy Ray.
Yeah, I know we have virtually no wiggle room this time, is there? I mean, the slightest little problem, and we're going to be looking at a worldwide food problem, I think, this year. It could be really interesting for sure. It's the first time I've seen corn go limit in a long time, Rich. I was shocked.
I know. And the other amazing thing is, we had a 34-cent correction in the corn. We had 79-cent correction in the beans. Mm-hmm. Most of the managed funds maintain their long positions. Mm-hmm. The players in these markets are huge, highly capitalized, asset allocators, and they don't switch more than, say, quarterly. I mean, it's a different kind of animal versus the short-term guys and the regular traders that we're used to seeing. This is this. I mean, when you've got banks, and I know this firsthand, that are having commodity traders as part of their asset allocation for their foundations, et cetera. And you've got Goldman saying that, that focus on the commodities. It's a big deal. Now, copper you can understand because it's much more used in electric vehicles and stuff like that. So there's reasons, there's increased demand. But it's in all markets. And then look at the price of lumber. I mean, it's going to be a very interesting year. And as long as you control your risk, trade with stops or use option positions to control your risk, you can do very well.
Well, we're hoping. Anyway, listen, thanks for being with us.
After a report comes out, because once those numbers hit the screen, boom, there's air gaps. There's where prices don't trade, and so you would get back stops that, how could this happen to me? Well, because the algos cancel the orders, and there's just a vacuum between X price and X price, and so the stop you get would be way different. That's why I said, I don't try and trade before reports.
Oh, yeah, it was really tough. We were doing a live trading session, and we were watching the corn, the East corn down around that 450 level, and I said, it looks like a buy here at 449. They said, but, you're going into one of the most major reports, and I said, the bias has got to be to the upside because it's already sold off. It already sold off 30-some cents, so it turned out to be a heck of a move. But anyway, those are just some of the things that you have to worry about when you're trading into a major report, which, as you and I know, is not a good thing. Wait till after it's over, and then you can decide what to do.
Well, but if you do want to do it, you do it with options. So, if there's a surprise, you capture it, and if you're on the wrong end, you know how much you can lose. You've intelligently defined your risk.
Yeah, that's what it's all about.
I'm always talking about intelligently defining your risk.
Yeah. Hey, listen, thanks for joining us, pal. I know it's busy for you today, but I want you to let the folks know that you're on top of it, and we're going to be watching it, the weather, and the planning will start pretty soon. In fact, it's probably starting some places in the Midwest already because it's getting so warm. Thanks again, Rich. We really appreciate it.
73 this weekend. You have a happy Easter. Talk to you later.
73. Wow. We'll be right back, folks. 877-927-6648. I wanted to drop a nice little picture here of our good friend Lewis Winthorpe III from Trading Places, and he's going to give us some good advice. Is 1 minute you're up $500,000 in soybeans. The next, boom, your kids don't go to college and you've repossessed your Bentley. Lewis Winthorpe III. We'll be right back, folks.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a 15-minute chart of gold over the last 7 or 8 days. You can see we had that monstrous drop. Well, folks, it's taken out the top of that chart already today, folks. We've rallied well over $70 $60 an ounce here in the gold market, and silver well over $1 an ounce. I sent out a special report, of course, late yesterday. Not yesterday. It would be, let's see, when it's been Wednesday morning, real early, like at 1 o'clock in the morning. We had just hit the major price level in silver at 23.80. And we gave a buy signal on the silver and then gold shortly thereafter, because they both looked like they were going to go up at the same time. And fortunately, that was the day we were trading live, and it turned out to be a really nice trade. So it was a fun day, a lot of nice people. I was so impressed with some of the people that were in there that had been studying the stuff, that it really made me feel incredibly happy to see that they were following some of the ABCDs, with the stipulation, of course, that some of them win and some of them don't. But those are just a few of the things you got to remember when you're doing these things each day. But it's very, very important. Now, we had a special request from one of our good friends over in Hong Kong, and I want to bring this up here. He wants to know about the Hang Seng Index. This is a really good one to look at right here. You'll be able to see, get this up here. You'll see here, this is the long-term weekly chart in the Hang Seng. You can see down there in March of 2020, we had a double ABCD, double Gartley's down there, exactly at 21,500, and we just took off like a rocket, going up to 31,500 to the 78% level, and right now we're trading right at 29,000. But the question that the gentleman asked is it time to buy the Hang Seng Index? And so what I'm looking at here is I go down to a daily chart, and again, we're going to use some of the stuff that we've heard from our friend Rich Anderson about how much we're going to have to risk. And if we get this up here, you'll be able to see here that just this past week, last Friday, we had just made a 382 retracement in the Hang Seng Index. I mean, you can see the 3 drive to a bottom pattern that is there. and it's right at a 382 retracement of the low we made last March. So you got from March to March right at a 382 retracement. You can see how strong it closed on Friday. Folks, this has a possibility of gapping up and really being really strong. My problem is, and I'm going to say this with a great deal of respect, is I have a hard time buying strength, because every time I seem to do that, I have to write a check in, to cover the margin. No, I just don't do strength. So what I would do is you're basically up 7 days from Friday to Friday, 5 trading days. So what I would suggest the gentleman to do is to wait a day, let the dust settle and see what happens. Because if it goes up, it's going to give you, there's going to be a time here where you're going to get 1 or 2 down days, and then look at it to buy there, because then you have a better handle on the risk. Because if you buy Monday morning in the Hang Seng, and you've got to put a stop in somewhere. So if you're going to do that and it gaps up, that's going to be not an easy one to do. So remind ourselves that this is not about how much money you're going to make. It's how much money you don't want to lose. And at that particular spot, I don't have a really good entry point. The good entry point was last Friday, right at the 382 and the 3 drive to a bottom pattern. I mean, that's just as nice as you could possibly get. But, we don't always get those. That's the main thing to remind ourselves. I mean, we just hit 4,000 in the S&P. Folks, when I was on the floor of the exchange, I was in the pit the first day, April the 16th, 1982. It was trading for 103. That was spot cash. Do you know that the S&P futures were trading at 200 points, two handles? That's 500 points, which is $10,000 nowadays. It was $500 a point at that time. It was trading at a discount and stayed at a discount all through 82, all through 83, not until the Dow Jones finally broke substantially above 1100. Can you believe that? I'm saying 1100. And did the market really start to take off? And then it went to a discount. So that's it. It's really, it's really quite incredible. So we've got to remember, it's not about how much money you make. It's about how much money you don't risk. And that's such a key figure to remember. It's very, very important. That's for sure. The good news is, some of the people that were in the Tesla have, gained back some of their money because it's acting a little better and stuff. But there's still a lot of problems out there. Let me just give you an example. Today we've got the S&P making new all-time high above 4,000. Okay, and look at the Russell here, folks. The Russell is just barely, and this is going back over the last 10 days or so. It's just barely making. It just made a 61% retracement up there at 22.5 or something like that. I mean, it's right on the money. Now, I don't know if that's going to mean anything today or not. I'm not sure. But if we take a look at what the NASDAQ is doing, the NASDAQ finally, after all this time, we finally got here. Somebody's saying, please thank Sarah for encouraging no cancellation. Oh, yeah. Yesterday, I woke up and I was still having a little bit of side effects from the COVID shot. And I said, I think I better cancel this. And Sarah said, nope, these people are there to listen to you, so you don't want to do that. And she was right. Once I got started into it, the energy level just kept picking up. And we went 5.5 hours straight through, I think, with 2 10-minute breaks, and really had a great class. And we got to be able to show a lot of things that were going on, and the markets were doing what they thought they were doing, and it turned out to be a really, really fun day. And I want to thank everybody too, because I really enjoy it. I mean, I had so many nice comments about it. It was great, and the people that were giving some good criticism, I think that's important too. So it's really a lot of fun to do something like that, because you show what you're doing, why you're doing it. And it turned out to be really good. The silver and the gold, sir, made it a big day, and we had a nice one in the bonds too. The bonds one actually broke quite a bit too. All right, let's move on to a couple others that I wanted to show you here. I've showed you the NASDAQ up here. Now I wanted to show you, this is the Dow Jones Industrial Average, and you talk about a weak sister today. The NASDAQ's up 250 points, the S&P's up 30 something, and the Dow's not even up 100 points. I mean, you can see here from the high we made way back on the 29th of March, we've been in basically a downtrend for this is lower tops now for quite a while, and we're just barely making a 50% retracement of the high. So this is acting, but this is what rotation's all about, folks. I mean, we've seen this before. You know, the Russell was running like a striped deer for quite a while, and the S&P was lagging, and that's not what's happening now. The market is actually, turning around. We're even seeing a big ABCD pattern in the Treasury bonds. Remember, we had the high at 57.08. Well, we rallied back and made a huge Gartley pattern in that up there at that 56, 12, 13 area. So it's going to be really interesting to see, how these markets respond. But we do want to thank Rich for being on, and we're going to be able to yeah, that was a nice one, Danny. Yeah, it sure was. Anyway, we're going to be able to follow these grains a lot more, folks, because this is the kind of action that we really like to see. It's just really exciting to see that. We've been seeing this volatility is getting greater and greater, so get ready. If you're not using stops, put your applications in at other places to work. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I'm back, folks, and I wanted to post a chart of the German DAX. You can see there's a huge ABCD pattern that is up here in the process of forming that we've been looking at that for quite some time. But I also wanted to show you the FTSE. Now, the FTSE has been a lot weaker, and part of that is because they're having so much trouble with the lockdown over there in the UK. So you'll see here that this has just completed an ABCD yesterday, and we backed off a little bit today, but it's still, really quite early. But the one that we really need to pay attention to is the next one, and that is in the gold market, folks. We were looking at that bottom in the gold market yesterday along with the silver. Silver hit the exact price. I mean, to the penny. I mean, it's just unbelievable how it hit there at 23.80. We rallied over $1 an ounce in one day, and I sent out a alert about an hour and a half ago saying that we are taking profits in the gold and silver up here. And the reason why is, if you'll notice here, what we've done is we have completed low from 1677 up to 1731, a nice total of a little over $60. But the main thing is that big rally that we've had yesterday, I mean, I was totally shocked because I really expected, the open interest to increase with new buyers coming in. There was a big drop in open interest. Folks, when you see a rally like this with a big drop in open interest, that's not new buying, that's short covering. And so I said, I don't want to give any of that money back. So I said, let's take profits. I think gold was trading around 1722. Silver was trading around 24.80 at the time. And I said, let's just book it. I said, we don't want to get in the way of it. Let's wait a day or two. Sure, it might run off and, head for the, the stratosphere. Well, we'll look for another place to buy it. But when you get a windfall like we had, and, part of it's, you just luck, luck is where preparation meets opportunity. Anyway, where perspiration meets inspiration, as Mr. Henry Ford used to say. Anyway, that's what I did. And I've had several questions say, why are you getting out of the gold? You were so bullish. I was bullish. I was bullish $60 ago, and I don't want to give any of that back. That's basically the bottom line. And, stop and think, folks, over the last in the last few months here, well, the last 3.5 weeks, we've taken well over $140 out of gold, and it hasn't gone anywhere. So we're just going to wait and see that. I just want to wait and see what happens. That's just my way of just being conservative, and we're going to watch it. We've had some nice little tiny bounces in the currencies. Yes, we were aware of that. We were expecting a possibility of that euro, making a bottom down there at the 382. We're going to cover that extensively over the weekend. And since we have an extra day off on Friday because of the Easter holiday, we'll be able to get some extra things done, and we'll have some extra videos coming out over the weekend getting prepared for Monday. But, folks, the volatility is in every single market. You're seeing it: gold, silver, stocks, bonds, commodities, wheat, corn, beans, oil, soybeans, wheat, hogs, all of them. You've got to be able to use some money management when you're doing these, folks, because the moves are there and you're going to be able to do okay. But if you blow it all, it's not going to be okay. So you just got to be prepared. It's not about how much money you make. It's about how much you don't lose. And therein what you have to do when you're watching some of these things. Very, very important. That's for sure. Anyway, yes, the Ruby, we are watching the British pound. We've seen that. That was one of the things we were watching real closely on the trading session yesterday. The British pound had pulled back to that 137 level, and away it went. It went up to, I think we're almost at 139 today. So those were all lining up. Just really nice, simple ABCD patterns, which we focused on. And then we focused on, of course, the importance of the 382, and then we did butterflies and Gartleys. And there was just a lot of things going on, and there were so many people that were contributing to it that was great. The questions were terrific, and we also had some really neat opportunities to show how some of these markets actually work in real time. But it was a good day. I mean, today would have been a good day too, because today's pretty much a straight up day, but that not always are they going to be straight up. Sometimes it's straight up, sometimes it's straight down. Just remember what Ronald Reagan said: any government that can, it was Thomas Jefferson. Reagan was just quoting him. Thomas Jefferson, any government that can give you everything you want can take everything away from you. So just remember that. And we're seeing that now with this new $2 trillion structure coming out where they're going to increase corporate taxes. and probably other things too, but hopefully it'll all be better when the roads get built better, and that'll be even fun, and we'll go on living. Basically, we already live in a fiat currency, folks. The dollar's not backed by anything anymore, so it doesn't make any difference how much the bonds they print or whatever they're going to print. It doesn't really make any difference anymore. Maybe that's why the cryptocurrencies are going to be good. I don't know. But we haven't been in an era like this since, it's been a long time, going back about 50 years. I think I can't even remember the last time. It was just crazy, was, of course, during the 79 and 80 when inflation was 13%, believe it or not. And interest rates on the bonds, believe it or not, folks, was 13% on a 30-year Treasury bond. It was trading for under par by a lot. It was the par was 100, and the bond would be trading at 50 and 51. So a 6.5% bond was yielding 12.5%, 13%. But that didn't last for very long because Jimmy Carter brought in Paul Volcker, and he said this ends today, and it did. That was back in 1980, I believe. It was August the 9th of 1980, and that's when the market bottomed at 103 in the S&P, and away it went. So good to know these things anyway. We had a question here about Tesla. Let me get this up here, and I'll get Tesla one more time here, and we'll be able to see if we can get this correctly. Hold on a second. I want to get Tesla up one more time, and then we'll be in good shape here. We'll see if it's still in a little bit of a rally mode here. And yes, sir, we had a nice rally. In fact, we got right up there to that level we thought it was going to get to. Let's just get her up here, and we'll be able to see it. You notice, let's get down here, right here. Okay, here's a Tesla. Let me get this up here. We were in the mood here to take a look at it. Remember, we said it's got to hold $600. The low was $598 or something like that, and we've rallied almost $80. Right up against that, those three, that would have been a 135 pattern. Well, with the gap up today, that violates that. So once it gaps up like that, you can't sell it. I mean, right now it's backed off quite a bit from the high. We had a high of 692. We're trading at 676 right now, but that just basically completes that ABCD pattern is all it is. That's not a bullish chart, folks. That's just a fact that it's rallying in a bear market from the perspective of looking at that chart, because there's really not much you can do about it. Let me just go down to a 30-minute to see if there's anything there that would have lit up your light. Yeah, this is a very nice one here. Let's just take a look at it on a reverse. Hold on, I want to put up the pattern here so you'll be able to see the retracement number that we hit. Oh boy, can't make this stuff up, folks. Maybe these numbers do actually work. Here is the picture of the old Green New Deal there. We need that too. The high today in Tesla at 691 was an exact, to the penny, well, within a half a buck, of the exact high that was made on the 10th of March, 786, exactly. We'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, I want to put up a chart here just to show you when I talk about, looking at different things in the market, getting market feedback of what the market's really trying to tell you. This is get this chart up. This is a chart of May soybean oil. That's basically the cooking oil and margarine that we use. I want you to focus on the red box down there. You'll see that was on the 30th of March. We had the report coming out, of course. This was the day before the report. You can see that it was locked limit down. Those little dots that you see, there was no trading. And then when it finally opened for trading, it opened slightly lower. And then it rallied. And then, of course, the report came in and the market made a huge ABCD. And it stopped exactly at the 78% retracement of the high that we made on the 29th. It didn't go crazy to the upside. And you'll see what it's done today is it's backed off a little more than 1.5 points down to that 5180 level. And that makes it a 135 pattern. That's why when you're following these things and you're looking at an hourly chart, you can get some really good entry points. But the most amazing thing to me was the fact that this thing was locked down for 4 hours before it reopened. And then when it reopened, it could only open, $60, folks, 10 ticks, $60. And then it rallies well over, $2,000. And, it's just truly amazing how these markets are moving. So, years ago, back in the late from 60, 70, and up until about 1985, we didn't have this kind of technical stuff to do this. I mean, we were basically running blind looking at intraday charts. But ever since 95, we've been able to get this stuff working pretty good. And now all this electronic stuff is just super, super good. But great volatility, and that's what we're really shooting for here, is to see how these things go. But we've got to remember that these are incredibly interesting. The old Chinese curse, may you live in interesting times. And it is true, but you've got to be able to realize that you cannot trade these without a stop, folks. It's just you're asking for really big trouble if you do that. And the reason for that is, folks, these markets they can take a lot away from you. That's for sure. There's no ifs, ands, or buts about that. So, but the numbers still work pretty good. That's the bottom line of what we're trying to see here as we go through. Now, I wanted to bring one other one up here, if you'll give me 1 second, that we were talking about this past week, because it's going to be really interesting. This was this long-term picture. You'll see here Well, I didn't want to get this up here. Hold on one second. I wanted to get the larger one in here. Hold on just a second. There's where we go. Okay, I wanted to get this up to show you. This was the number here in the silver. Last night we got down to 2378, folks. 2377, 2378. That was the spot on exact 78% level on that silver, and we've rallied up over $1. And even rallying. Just look at this, folks. Even rallying $1 an ounce, you're still not into the highs of the range of last week. So that's another reason why I said, wow, this thing, if it was really good, it'd probably be up $2 an ounce. So that's why I decided to take the profits off at the gold and also the silver, just to book some. And because of the volatility we're seeing everywhere is really quite interesting. Now I'm going to get out of bounds here for just a little bit, folks. You got to bear with the old cowboy. I'm going to really step on some toes here. So just bear with me. I'm going to show you what I'm looking at for today. You can take it for what you want, and maybe it means something, maybe it doesn't. That much I don't know. But here is, I know you're not going to believe this when you see this, but it's true. Let's get this up here. This is what the AI is showing for today. Let's just see what happens for kicks and giggles. And you know why, folks? Today is my last day at TFNN, folks. I have decided to retire, and I just wanted to wish everybody a wonderful happy rest of your trading life, because you know what today is, don't you, boys and girls? It's April Fool's Day. Ha ha ha, you're absolutely right. But we're going to see what rolling on the floor. Good for you, Cindy. Anyway, let's keep and see. Watch it. Now, what this is saying is there's a probability, a statistical probability. I bit into that one, Al. Al's retiring too. Well, he's going to retire tomorrow because we are off of, is that chart April Fool's? Yeah, it could be April Fool's, that's for sure. Anyway, but what you're looking at here is a artificial intelligence program that predicts where the highs and lows should be during the day. And as you can see here, we've had a heck of a run. We've already ran 30-some handles, but it should top. Hello, Larry. Try it again. Right around 1:30 would be the time that you'd be looking for the top. 1:30 to 2 o'clock is where the market should be. We're trading at 4,002 in the June S&P now, so somewhere it would be in the air. It could be, who knows, it could be 404, 407, but sometime after 1 o'clock, 2 o'clock, within an hour or so, this thing should start to roll over. And if it does, it says it's going to give quite a bit of it back. Now, maybe it doesn't, but that's what we're paying attention to here this morning. So I will have to wait and see, what the market is going to tell us. But that's what we're watching here today with this. Now, sometimes they work, sometimes they don't. Now, here's one. I'm just going to give you another one here just to show you what we're looking at here in the euro. Here's the euro. We've had a nice run here in the euro, and just get it up to take a look at it. By the way, I didn't use any of the AI stuff. I hit the wrong button. Shut the front door and raise a rent. Sorry, boys and girls. Let me get it up here. There we go. There's the euro, and I didn't use any of the AI stuff yesterday. We didn't hardly mention it at all. But today, because it's such a big move and such a powerful thing, and I will tell you this: if after 2 o'clock, New York time, and the market hasn't started to turn down, the high probability is the AI is not working, and it's probably going to end up really strong. That's the bottom line of what we're watching here. So just keep in mind, it's all about probability, all about risk control, nothing more, nothing less. So remind us, we're going to have a special guest on Monday, the 5th of April, I believe. Yep, the 5th of April. Jeff Hughes from the investment dudes over in the Friends of Rich Anderson out of Minneapolis. He's a hedge fund manager. Alpha Trends, I believe is what it's called. And he's been our guest before with some really great stuff. And he's going to be our guest on Monday at 12:30 our time. So that's it. If you have any questions, folks, Al says it's too late anyway. He said the the boards are all lit up, so you're not able to call in today. Anyway, I'm a little punchy from yesterday because we had a lot of fun. We went 5.5 hours with, I think, 2 10-minute breaks, and it was just fun. I mean, it was like people were asking great questions. It was just really a lot of fun. Hold on a second. We got somebody calling in here. And, a line just opened up. Oh, Al said that they've just called in, and unfortunately, the time is not permitting. Yeah. Yep. Thank you for all the questions you guys asked yesterday, because that makes my job easy. When you ask questions, it leads to one question and another. But, boy, did it go fast. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks, I posted the chart, hourly chart of the, 15-minute chart of the Treasury bonds over the last several days. You'll see we had that big move up We had the 3 drive to a bottom pattern. We covered the longs up there at 157.03, I believe. We had a pullback, a beautiful Gartley down at the 786 yesterday. And what we've done now is we had a Gartley on the upside here with a lower high, supposedly at 156.13. Now, I don't know if that's going to be the high or not, but, we got a lot of volatility going in these bonds, folks, and they trade extremely well. You don't have to worry about stops being run. You don't have to worry about stops being run in anything because it's very, very fair in all of these markets because we trade electronically now. But the main thing is you got to focus on, how much you're going to be risking. These markets are moving fast, and they're moving good, and that's why we like to see the doggone things doing what they're doing. I said from the very beginning, if you remember, one of the reasons I wanted to change to this time frame is because it's so important. Those first few hours of the day, you get set up and to see what's going on because these algo traders come in. And look what they did to the Dow Jones. They massacred the Dow, and the NASDAQ and the S&P went straight up. And, the Russell did a little bit, but nothing. I mean, you got to be able to do that to try to see what's happening early in the morning. That's the market feedback that you really need, to see what's happening. You got to see what's going on with these. Anyway, that's what we're looking at today. Whether it means anything or not, boys and girls, I don't know. All I can tell you is it helps control risk, and that's the main thing. One other thing I'd like for you all to do is live every day in an attitude of gratitude, and may God bless. And please help your neighbors because some of them are still having a whole lot of trouble. And believe it or not, it's April Fool's Day. Be sure you pull a little joke on somebody. And I told Sarah this morning I bought a new Porsche, and she said, "You what?" And she fell for it, hook, line, and sinker. Anyway, folks, please be with us Monday. We're going to have Jeff Hughes on. He's really tremendous with Alpha Investments.